Hey everyone, welcome. It is 1 p.m. on April 1st, and we just got the closing bell for the very first session of the quarter. We were expecting a pullback in all the major indices because we had so many stocks creating or hitting all-time highs or 90-day highs, and that is generally a signal for us to pull back. And based on everything that we were looking at this morning, we felt that would be a mild pullback either to the EMA 8 or the EMA 20. And we did get that in basically all of our major indices. So the S&P 500 pulled back to just above the EMA 8 right there and then crept a little bit higher. Is this move done? Maybe not necessarily, because that was a very small move. There's still a chance that later on this week we start going towards that EMA 20. However, we do have a lot of seasonality on our side. We've got the weekly seasonality where we tend to dip on Monday and then rise throughout the rest of the week. And we've got one of the strongest 2-week periods coming up of the entire year. So that could all mean that maybe this was it. This was the baby pullback. We're still very close to all-time highs. If that's the case, then this is a little baby wedge right here with the all-time highs as the horizontal and the EMA 8 as the sloping upwards part of the triangle. And that would indicate a higher probability of us moving higher and creating that all-time high. Now, I don't know that we're necessarily done. We could pull back even more, but there we could equally move upwards from here. The QQQ basically went super flat. We opened where we closed, or we closed we're very close to where we opened, only 0.98, so 1 point above, or 0.22%. Again, that is basically right at the EMA 8, and we're still very comfortably inside this green box that we've drawn. When we look at the Dow Jones, it did something very similar to the S&P, so pulled back to the EMA 8. This one actually looks like it might have touched. Yeah, it actually did touch that EMA 8 and then back off a little bit, so slightly weaker than the S&P 500. So overall, it looks like the NASDAQ, or the QQQ, was the stronger of the three today. So the QQQ, I was actually slightly up, but we'll just call that flat. And the S&P 500 down. Actually, that was pretty flat too. It was only down 0.16%. Very flat day today. Also, we haven't seen a whole lot of volume return in S&P 500 yet. We are basically at the average on the Dow Jones, so we might get a little bit higher than that after we count out all the dark pool stuff. If we look at the QQQ, that is pretty close. So we are not even about 10 million away from the average. So by the time we tabulate all the dark pool stuff, we'll probably be very close to that average, if not over it. And the S&P 500, we're a little bit further away, 48 million versus 72 million on average. Even if we add in 10 to 15 million to account for delayed data and dark pool activity, we'll still be a little bit under. So not the full participation back in the market yet. So we could see that pick up over the next day or two after the senior traders have gotten back on the desk and have gotten a chance to evaluate everything. We did have that slew of data that came on Friday that was basically should have been absorbed by today's session, so we don't have to worry about that anymore. And in our economic calendar tomorrow, nothing really. Wednesday, mostly energy related stuff. Powell's speaking, but he's been saying the same stuff for a little while now. We don't really expect him to say anything different. And if he is going to say anything different, it really shouldn't be at one of these random meetings. It should be at a known and scheduled meeting or a regularly scheduled meeting. So for example, after the FOMC minutes are released, or after the announcement, after the rate cut or hike decision is announced, those are times we would expect him to make slight changes to his speeches. Here, and other speeches where you just see, oh, whoever speaks, Austin Goolsbee speaks, Jerome Powell speaks. For Jerome Powell as the chairman, he basically just reiterates everything that he's been saying. So this is not going to be a huge market moving event. International trades in goods and services, that might be a little bit but really it's all eyes on the employment situation. We get that on the first Friday of every month, and it is something that the market does pay attention to because the Fed does pay attention to the employment situation when it makes its decisions on rate hikes or cuts, or any monetary policy decision is a dual mandate. It's the unemployment rate, and inflation. So this is the employment half of the equation. We got PPI, CPI about a week and a half ago, and those were showing increased inflation. And if we get a poor employment situation report, and that might indicate continued struggling or continued higher inflation, then we would get a delay or we would expect a delay in rate cuts, which is basically what they've been saying. Let's wait and see. It's just that Powell opened the door to possibly becoming political, but we won't expect him to make any politically motivated rate cut or rate hike decisions until we get closer to the election cycle. So we're not there quite yet. That's still at least 6 months away. So, or maybe 5 before we really start seeing the elections hit the news and potentially affect how markets are trading. So there's still a little while before we have to worry about that. Let's take a look. We already know that QQQ did better than the other sectors. So we're going to expect tech to have held up communications, the SMH. Let's take a look at that, SMH. So SMH up a tiny bit, but really still in the same range over here. QQQ, we already looked at that. XLC, same, matching the highs right here. And I get XLK. XLK, baby, minor move, or flat, really flat today. So not a lot of action, which probably means that other sectors fell while technology was kind of steady. Let's take a look how our dollar index or our dollar basket is doing. So still increasing. And then let's take a look at some agricultural stuff. Yeah, so we can see that the agriculture fund, it's been just on fire. It's actually starting to look a little parabolic, especially if you look from this better zoomed out view. You can see how it's going parabolic. That is highly inflationary. And it's convenient that the government says, oh, well, we're gonna look at X food and X energy. So they're not taking this into account when they're looking at the CPI, but this is definitely hitting people's pocketbooks. So the felt inflation by a household is definitely going to be affected by this. And that would cause people to pinch their pennies, spend less, change their shopping behavior, buy a different quality or grade of product. So if I'm used to putting 91 gas in my car, then I might go down to 87. If I'm used to buying a brand cola like Coca-Cola or Pepsi, I might go down to store brand cola. There are little ways that people will start to modify their behavior when this type of price action happens. And if we look at XLE, I'm pretty sure that's been going up quite a bit also. See this period XLE. So yeah, it's convenient for the government to say, oh, inflation is not, even though CPI and PPI, this particular round went up a little bit. It didn't go up that much. It's only like 0.1%. But if you actually take into account things that people actually do spend their money on, which is food and energy, then actually, yeah, our CPI, our inflation numbers should be a lot higher. So rate cut, unless it becomes really politically motivated, we're not going to expect a rate cut. But we do have to watch out for that because there's no real good way of predicting whether or not we're going to get a off schedule or a cut that is not motivated by the data or not motivated by the actual mandate of the Fed, which is to keep inflation and unemployment in check. So this is something that is just another risk that's inside the market right now that we don't necessarily normally have. So we need to be a little bit more careful. We don't want to go super high on allocations in either direction because news does have a little bit more potential right now heading into the election cycle to affect short-term movements inside the markets. So all of our major indices, they pulled back. We saw that the S&P come very close to that EMA 8, and the Dow Jones did touch it, the QQQ did touch it. We're basically sitting at the EMA 8 on all three of them, if I remember. Yeah, so on all three of them we are. So when we look at the performance of our portfolios, we want to keep that in mind. If your portfolio is pointed upwards because the S&P 500 is in an uptrend, then overall your portfolio may have gone down a tiny bit today. And it might feel like oversized, it might feel like a lot. It might be like a gasp of air, like, oh my gosh. But if you take it into context, you see, because if you're doing a portfolio of options, it's leveraged, and a pullback to the EMA 8, then that's a normal movement. It's a normal movement within the index. As long as you got a normal movement within your stock as well, then you're not going to worry about it. It's like, okay, well, I should expect that my portfolio would experience this volatility on a normal, very mild pullback. So if I'm experience a pullback to the EMA 20, that's going to take another hit to my portfolio if I'm pointed upwards like the S&P 500 is pointed upwards, as I should be if the S&P 500 is pointed upwards. And so if this hurt a little, then this hurts even more, then we're probably over allocated. So you just want to make sure that your expectations and the performance inside of your portfolio are lined up, or what happens inside of the market and what happens inside of your portfolio are lined up. You don't want to say, oh, okay, well, the S&P 500 went down 0.17%, and my portfolio just say is 10x leveraged. Okay, so maybe my portfolio should be down 1.7 to 2%. If it's down like 20%, then there's something wrong. So we just want to make sure that you're sized correctly. And if you got an outsized movement in your portfolio, you're probably not sized correctly. So let me just grab a position. And how about Walmart? Maybe not best example, but maybe like GoDaddy. Also not the best example. I needed something that went down. XLP. Yeah. So XLP bounced off of the EMA 20, made an all-time high on Friday, and then pulled back to its EMA 8 or slightly below it. That's a normal movement. That's not a break of this trend. That's very normal. And so we wouldn't freak out about that. You say, okay, today's movement is a normal movement. Tomorrow, it might bounce off of the EMA 8, and then I'll get a large movement to the upside. So as long as your stock didn't break that EMA 20 or fall to the MA 50 or break the MA 50, then you're fine. The S&P 500 pulled back to the EMA 8, your stock pulled back to EMA 8. That's perfectly fine. And if your stock didn't look like it was moving with the S&P, a lot of them are, right? So this XLP looks a lot like the SPY, the lows starting from this past October. Very similar movement. If I do, for example, Microsoft, MSFT, very similar movement from October all the way till now, similar movement as the S&P 500. So if there's a pullback to the EMA 8, then that's fine. It's normal. Actually, Microsoft is leading because it's tech, not S&P 500, is actually leading a little bit. Because remember, the QQQ was actually up a little bit, not down like the S&P 500 was. So I should probably find an example that is following the S&P 500 but isn't a tech stock. So maybe let's try GE. Okay, there we go. So we had this all-time high right here on Wednesday, and then Thursday it started to pull back to EMA 8, and we stayed here at the EMA 8 today. So we led the S&P 500 a little bit on Thursday, and then we're matching it. We're just staying at the exact same place. So we allowed the S&P 500 to catch up, and they're both sitting at their EMA 8, perfectly normal. So we shouldn't freak out. We should be upset about a single day downward movement that might have gone against if we were playing this trend to the upside. So we just be aware of what is a normal movement. Don't get myopic and get too caught up on a single day P&L. It's actually better for you to look at the price action of the underlying stock than it is to see, oh my gosh, my option swung 20% up and then 20% down, and you'll get a lot more instability and emotional turmoil if you're looking at a day-to-day P&L or the performance of an option rather than the actual performance of the underlying stock. Let's take a quick look before we end this at the sectors, which I must have done something wrong, and see how we did today. We were expecting the QQQ to be at the top, and it is pretty much at the top. We got XLK, QQQ, XLC all at the very top. Silver and gold more conservative and up there with it, so that's a little bit of fragmentation. Then we've got the SMH at the very top, so that's still in the QQQ, XLC, XLK. And then just above that, or just below the SMH, but above the XLC and XLK and QQQ is energies. So we got energies moving up, or at least performing. Yeah, they moved up 0.76%. We've got tech, look, overall moving up, and at least the communications and the semiconductors in particular, XLK in general and QQQ in general, are somewhat flattish, but the other pieces of the tech sector did perform quite well today. So we are getting some sector rotation, and the fact that the rotation is going into the tech is another sign of positivity for this week. So there is a chance we'll break the all-time high this week. We'll see. We've got the seasonality on the weekly basis, on the yearly basis, and the momentum within the sectors and the sector rotation all supporting a potential move upwards in the indices and matching or reaching a new all-time highs. So we'll see. Realistically, a pullback, this tiny bit of pullback to that EMA 8, it shouldn't have relieved too much pressure. So if we fall in between the EMA 20 and EMA 8, or even all the way down to the EMA 20, don't be surprised. But for now, it's looking pretty positive that we might have a pretty solid week here. All right. So I think that's TLT. I'm pretty sure we haven't looked at TLT yet. And this is what we were saying this morning. We reached the top of that channel. We pulled all the way back in a single day, gapped down and traded lower all the way to this horizontal line, almost perfectly, just a little bit above that horizontal line. So it gapped and filled the entire range today. So we want to watch this very carefully. Can it bounce off of this horizontal line right here, which I think happens also to be the MA 150, but we don't care too much on TLT. Really, the 50 and 200 are the major ones that we care about. So really, this horizontal line, if we can bounce off of it, then we'll just be inside of this squeeze right here for a little bit longer. If it breaks down, then we are looking at a potential move down to the EMA 20 in the S&P and the QQQ. Okay. But for now, or actually in the QQQ, it might be even all the way down to the MA 50. So we'll want to watch the bonds very carefully. We are asking the question that if bonds would lead and correlate and drag down the indices with it, and it looks like at least a little bit, maybe not a one-for-one correlation, but there is definitely the mutual effect of bonds moving down actually pretty significantly, 2.2% in a single day, and then the S&P 500 and the Dow Jones also making an associated similar direction move. QQQ really staying flat because it's tech heavy, and tech should have moved down with it also, but there are other forces that are playing in the tech sector right now, like the AI buzz and the enthusiasm over the semiconductor chips. So things to look out for is, one, volume coming back into the market. When volume comes back into the market, does that create volatility? And does it create directionality, or does it create a whole bunch of chop? If we get directionality. Which sectors are we rotating into? Is it going to be tech, in which case it'll be looking pretty positive, or does it remain inside the basic materials, industrials, the lower to medium risk sectors, and then this market might just kind of chug a little bit higher and just keep on slowly chugging higher. And we don't have anything major because the start of the next earning cycle is not for another couple weeks. And then there's nothing really for us to worry about on the economic calendar, except for maybe the employment situation on Friday. So this week should trade pretty technically. And if we're looking at the technicals and we believe in the EMA 8 level, then we should probably bounce up here. And if not from there, then we'll probably bounce from the EMA 20. So the next couple days will help us determine that. Tomorrow, if we break below the EMA 8, or if we hold steady or move higher, we should know that by tomorrow or Wednesday at the latest. We should have a pretty clear picture of that. In the meantime, we're going to keep our portfolios pointed upwards. We have not broken this trend at all. In fact, this is still looking like a very nice, healthy, smooth trend right here. There is some forces telling us that we're topping out, but those forces operate on a longer time frame, not a day-to-day time frame, and maybe not even on a 1 week time frame. So on the 1 week to 1 day, or 1 day to 1 week time span, we're just going to take into account our trends right here, our EMA 8 or EMA 20, trends that we're following right here. And so we'll keep our portfolio pointed upwards. We're going to understand that any pullback in the major indices means a pullback inside our portfolios, and it's perfectly normal and perfectly fine. We just have to understand that there's nothing to react to or respond to just yet. And then if we get a bounce, then there's absolutely nothing to react or respond to. We just watch our portfolio bounce with the market. So that's going to be it for today. Have a wonderful rest of your day, and I will see you all tomorrow morning.